this is going to be the final crisis, which is, again, a U.S. dollar and a sovereign debt crisis, where it's not just the mortgage market that's in trouble, it's U.S. treasuries where, you have a crisis. Imagine how much faster the price of gold is going to go up when the central bankers have to compete with private investors who are right now not even in the market, or when the Western central banks, because the U.S. hasn't bought any gold, right? They're not buying gold in the U.K. or Germany or France. It's the East that's buying the gold. It's the emerging markets. Look, Poland. Poland now has more gold than the United Kingdom, right? So what happens when the West wakes up to what the East is doing and realizes that they need more gold?
Hey guys, you're watching Capital Cause, and my name is Danny, and today's guest is the one and only Peter Schiff, who I'm thrilled to have on for a second time. Peter, thank you so much for coming back.
Oh, Danny, my pleasure. How you been since my last interview?
It's good, especially being a gold stacker, a gold and silver stacker, let's say. I mean, both metals are up quite precipitously this year. Gold making new all-time highs, as we were kind of jokingly talking about, almost every day now. I think we are witnessing the 36th all-time high as of today at $2,800, or just about.
Almost. We're above 2785. But, it's really not gold making all-time highs. It's the dollar and other fiat currencies making all-time lows. You just need more and more dollars or euros or yen or pounds or whatever fiat currency you happen to deal in. You just need more and more of them to buy the same ounce of gold. Gold is gold. It's not changing. It's the same gold it was when it was $20 an ounce when we formed the Republic, or even when it was only $35 an ounce in 1970. But now you need $2,785 to buy that same ounce of gold. That means the dollar has lost more than 99% of its purchasing power.
Yeah. So let's just jump in, Peter. What is front and center for you right now? What is occupying your headspace at the moment?
Well, probably the same thing that's occupying everybody right now. We've got an election coming up in less than a week. The problem is, regardless of who wins, right, the problems are going to get worse. The budget deficits are going to get bigger. The trade deficits are going to get bigger. And we're going to have a crisis. We've been kicking the can down the road since Greenspan. But eventually we're going to run out of road here, and we're going to see a dollar and sovereign debt crisis. And I think that's what the gold market is telling you. Gold prices are rising like this as a warning sign. It's unfortunate that it's being ignored, but I think it's a harbinger of a much worse crisis than what we had in 2008 or what we went through with COVID. This is going to be the final crisis, which is, again, a U.S. dollar and a sovereign debt crisis, where it's not just the mortgage market that's in trouble, it's U.S. treasuries where, you have a crisis.
Yeah, it appears to be multiple crises kind of overlapping on top of each other at the exact same time. And you see this kind of played out in the gold price. What is exactly going to precipitate a rise in silver to catch up, though? Gold's been making new all-time highs. Silver still hasn't, though, but it has had a really decent run so far this year, nonetheless. So when is
silver's, $33, $34 an ounce. It's still well below its highs from 2011 and even 1980. Silver got to $50 in 1980. Silver is very cheap. I think investors are ignoring it. I mean, most investors are ignoring gold. The reason that gold is almost 2,800 is because central banks are buying it.
Yep.
Most Americans are selling gold if they even had gold to start with. And the media doesn't even cover what's happening in gold. But eventually they will. I don't know how much higher the price is going to have to be. I recently dug up a clip. I posted it on X when I was on CNBC in 2004 or so. And I'm talking with Mark Haynes, who unfortunately passed away years ago. But I'm talking about gold, and it's like $490 an ounce. And I mentioned, gold's $60 an ounce higher than it was when I was last in your studio
Mm.
about 6 months ago. And his response was, "Who cares about the price of gold? Why should I care about the price of gold? It's, and now it's, almost 2,800, and they still don't care about the price of gold. But for one reason, they care about the price of Bitcoin, which is irrelevant, but they spend all their time covering Bitcoin and no time covering gold."
Yeah, so it does appear to be, there does appear to be a lot of capital flowing into the gold market by way of these central banks, primarily from the east, but very little, if any, from retail and even institutions. What's keeping? We know why retail is not interested yet. For the most part, it hasn't really gained much steam in the mainstream media. But why aren't institutions? Why aren't the smart money interested in gold yet?
Well, I think the smart money is. There's just not much smart money around. I mean, my money's there. I think I'm smart, but but I mean, there are some people too, that are in gold, and you'll hear them. I was listening to an interview with Ray Dalio today, and of course, he's got a lot of gold, and a lot of other people that seem to understand the fundamentals of the problem also own gold. But we're a small minority when you look at the overall, investing community. But I guess they don't understand. They have a lot of confidence in the Fed and other central bankers. They don't even really understand inflation or what it is. They don't know much about money. And they mainly just follow trends or momentum.
Mm.
So they're too fixated on the themes in the NASDAQ and AI or whatever's just going up to even pay attention to gold. And they think that people who are buying it are just gloom and doomers, and that it's irrelevant. But they're going to be surprised, just like they were surprised by the 2008 financial crisis, which was something that they should have seen coming from a mile away. It was obvious that it was coming. I warned about it for years, and again, those warnings fell on deaf ears. And then when the crisis hit, everybody acted like it was impossible to see it coming.
Mm.
And the next crisis again is going to be worse, and gold sees it coming. I mean, not the price is where it is, but I think you're going to see a much bigger rise in the future. It's going to include silver, and it's going to include the gold and silver mining stocks, which I just was looking today. The combined market cap of all the gold mining stocks in the world is only about $400 billion. There are plenty of individual stocks that
Mm-hmm.
have a market cap of more than $400 billion. I looked at the MicroStrategy, which basically produces nothing, and it just leverages Bitcoin. It has a bigger market cap than all the mining stocks in the world, except for Newmont. And Newmont is barely ahead of it. It was like five, as of yesterday, it was about 5% greater market cap for Newmont mining than for MicroStrategy.
Wow. So what does that imply? I mean, as Doug Casey likes to put it, it would be like trying to drink through a straw from the Hoover Dam or something to that effect. Once capital actually moves into these sectors, I mean, they're just poised for some pretty huge gains.
Oh yeah, I mean, and the market doesn't get it. Newmont Mining came out with the biggest quarterly profit last week in 5 years. Reiterated that they're on track to have the biggest year of gains in their 100-year history of profits. Reiterated that the full year, but they missed on the quarter by just under 7% because there was an unexpected spike in costs. A lot of it was labor costs down in Australia, some other costs, and they thought it was kind of a one-quarter event. They didn't expect that high a cost in the current quarter, yet the stock tanked by 20%. I mean, a ridiculous reaction to a good earnings report that just
Right.
wasn't as good as had been expected. But it's not like, they were priced for perfection. The stock has had a PE of 15 on trailing earnings, which is a 50% discount to the S&P. It's the only gold stock in the S&P, and it's trading at a 50% discount to the index, even though it's growing its earnings faster than the rest of the S&P.
What's really interesting, and we spoke about this off camera before we hit record, was that the oil price has been relatively subdued, while the precious metal prices have both gone up to all time high. Well, gold has gone up to all time highs, silver's gone up to 12-year highs, but the margins that you can now get as a producer through these input costs being subdued through the oil price is now huge.
Yeah, in fact, when people want to blame oil for inflation, they don't realize that we're actually getting a break on oil. Oil is historically cheap. If you price oil in gold,
Mm-hmm.
how many barrels of oil can you buy with just 1 ounce of gold? Oil has never been this cheap. I mean, the only time it was early COVID when oil collapsed, in the beginning of the shutdown of the economy. But if you throw out that month or so under a normal circumstance, we've never had oil as cheap as it is right now. Even 50 years ago, 100, whatever, it was never this cheap. So we're getting a huge break. But that also tells you that oil is not going to stay at this price. Gold being at 2,800 tells you that oil's not going to stay below $100 a barrel, and we're still below 70. It's not going to stay below 70 or even below 100 for long. Oil is a leading indicator gold is a leading indicator of where the price of oil is headed. But in the meantime, it's great for the gold mining companies that need a lot of oil to mine gold. So, but this should be helping these stocks, but nobody seems to care.
Why is that? Is it simply a case of no one cares until they do, or will reality eventually catch up to the situation?
Yeah, that's part of it. Until these stocks make a bigger move, nobody's going to pay attention to it. But I know that move is coming. I'm trying to find the symbol. I always mix up the symbol of the my gold fund. You're holding Pacific.
Sure.
I looked for the no load. Yeah, so EPGIX is my gold fund. Adrian Day manages it for me, but it's the Euro Pacific Gold Fund. And EPGIX is the no load ticker that you could get at any discount broker. Or of course, you can contact my reps, and we could also talk to you about it. You can get information on the gold fund at europac.com. But I think there's an explosive opportunity here where people are paying attention to the NASDAQ. They're forgetting about what's going on in gold. They made the same mistake, in 1999, 2000, when everyone was buying .com stocks and gold was under $300. And the gold mining stocks were ridiculously cheap. And then the bubble burst and, gold went from 300 to 1900. And you got a lot of 5, 10x moves in the gold mining stocks. I think this is going to be an even bigger move. I think we'll make more than 10 times our money in gold stocks, maybe a lot more than 10 times our money. And right now, we're on track. 2024. We're on track for the biggest gain in gold since 1979. That's how rare a move this big is in 1 year, and nobody is covering it. But the big difference is 1979, that was kind of the end of the move, right? Gold peaked in 1980, and it went from $35 an ounce to $850. And there were gold stocks that went up 50x, during the 70s, maybe some, there weren't even that many around. But this, I think, is early on. We just started this bull market. This is the first year, because we had the first leg, right? We had a bull market from 2001 to 2011, right? That's when gold went from 270 to 1900. That was a big bull market. Then we entered into a bear market, consolidation, where gold went from 1900 down to 1000 and then back up to, 15, 1600, traded sideways, got back up to 2000, back down. But really from 2011 through the end of 2023, early 2024, gold went sideways. But what it did was form a huge base. And the resistance was around 2000. And we didn't really break out of that until this year. So we just basically left the launch pad, and now we're at, almost 2,800. But I think this move is going to be at a minimum proportionate to the move that preceded it. So gold went up about sixfold to go from 300 to 1900, right?
Right.
And so this move should be at least sixfold, which is 2,000 to 12,000. So kind of at a minimum, you'd think gold is going to go to 12,000, but I don't know why it would stop there. I think it's going a lot higher than that. And
Yeah.
again, it's not that gold's going anywhere. They're going to print a ton of dollars. We've got massive deficits in the United States. We're running about $1 trillion, every 4 or 5 months of debt. So we're adding like 3 to 4 trillion a year to the national debt. Interest is now $1.1 trillion a year. It's the second biggest line item in the budget behind Social Security. Probably by the end of next year, we'll be paying more in interest on the debt than we're paying in Social Security. And where's all the money going to come from to pay that interest, as well as fund the operating deficits? They're just going to print it. And so the dollar is going to get killed, and the price of everything is going to go up. If you thought we had bad inflation last year, wait till you see what's coming. And it doesn't even matter who wins the White House. Inflation's going much, much higher. And the gold market is eventually going to figure this out. And then, gold's going to even outpace inflation because people are going to be looking for an inflation hedge. They're going to see this freight train coming, and they're going to try to get out of the way, and they're going to try to protect their purchasing power. And they'll do that by buying gold.
Oh, I mean, it's already happening now. My good friend Kevin from North Star Bachelors, he's charted it out. Gold has broken out versus the CPI. It's broken out versus the PPI. It's broken out versus the M2 money supply, and it's all on the verge of breaking out versus the S&P and the Nasdaq and the Dow, and et cetera. So, and real estate as well. So if you chart gold against all of these other asset classes, gold is outperforming everything right now.
Right, and what you're really seeing is what's really happening to assets. For example, when this century started in 2001, the Dow was around 10,000, well, maybe 10,400, but just above 10,000. Gold was just around 300. And gold has gone up more than 8 times, whereas the Dow has only gone up a little over 4 times. So what is that telling you? That's telling you that the Dow didn't even go up. The Dow has lost about 50% of its value over the last 24 years. That's what gold is telling you. See, when we're pricing the Dow in dollars, the dollar has lost a lot of value. And so that gives you a false sense of what your wealth is, because it's like you're measuring your wealth with smaller dollars. It's like I'm just under 6 feet tall, but that's measuring me with a 12-inch ruler. What if I measured myself with a 10-inch ruler? Right? Could I play in the NBA? I'm not going to be 7 feet tall just because I shrink the ruler. So when you measure the price of stocks using gold, you take that away. What's really happening to stocks? Well, gold tells you that stocks are going down. So Americans, they're not getting richer, they're getting poorer. And especially look at your salary. People want to know why they're struggling to pay the rent, put food on the table, save for their retirement, why they're mired in debt. Look at your wages in terms of gold. How much gold is the typical American earning today versus how many ounces of gold they may have earned a few years ago, right? So the value of your wages is collapsing. And you're seeing that obviously when you go to the supermarket, anything you want to buy costs a lot more. Of course, if you were getting your wages in gold, you'd be fine.
Peter, what are the chances that we don't see a crash nominally, but we do see it in real terms? That is, the gold price inflation continues to outstrip the stock market, but the stock market never really crashes per se, but it just underperforms everything else.
Yeah, well,
they did in
Zimbabwe stock market never crashed in Zimbabwe dollars. It went way up, but it crashed in terms of U.S. dollars, and it really crashed, obviously, in terms of gold. But yeah, I think the odds of that are extremely high. In fact, that's my base case scenario is that we avoid a 1987 or more like a 1929 style stock market crash. We're not going to have that. Instead, we're going to have a dollar crash. And so nominally, in a dollar collapse, the Dow could go up. But it's not going to matter. Let's say the Dow, which is 40,000. Let's say the Dow goes to 100,000. Right? They go, oh wow, it's 100,000. Yeah, but what if gold goes to 50,000? Now the Dow is just worth 2 ounces of gold. Right now it's worth 16. So that would be a major collapse in the Dow if that were to happen, even though the price goes up. And if gold is 50,000 an ounce, imagine what it's going to cost you to do your grocery shopping. I mean, it's not like just gold's going to go up and just all by itself, right? Everything's going to go up. And so I think that's ultimately what we're going to see happening. We're going to see asset prices coming down in real terms, even if they continue to go up in nominal terms. The problem is the goods that you need to buy are going to go up faster. So the stuff that's on the shelves in the supermarket will go up in price faster than what's on the stock market.
Peter, we had this big BRICS summit happen last week in Kazan, Russia, where they unveiled what was seemingly their new banknote to represent a future settlement currency down the line. I brought this up to my previous guest, Doug Casey, and he was very skeptical as to whether or not BRICS could pull something like this off. Primarily because, you do have China, Russia, India in there. And the case is often made, they may not trust the United States, but they trust each other much less. Do you agree with that notion? And also, in conjunction to that, they have leaked out specifications of this proposed currency, which would include a 40% backing highlighted by gold.
Yeah, they just concluded that BRICS summit in Russia, and they didn't announce any kind of deal to form a new currency. But what they did make clear is that they're moving away from the dollar to the extent that they can. So they're going to try to trade with one another bilaterally in their own currency. So if Russia wants to buy something from India, the invoice will be in rubles or in rupee. It won't be in US dollars. That's what they're going to try to move away from, is using the dollar to trade, among themselves. And also they're going to be holding fewer dollars than they have. And so they're going to allow their dollar reserves to go down. And that's why, you're seeing what's happening with gold, because that's what they're doing. They are slowly replacing their dollar reserves with gold reserves. And that trend is going to continue. It's just getting started. And, that's the main reason that the price of gold, I think, is rising, but you're not seeing, silver rising, because they're not buying silver. They're just that they don't have the capacity to store that. So they're just buying gold, and they're not buying gold mining stocks either. They're just buying the actual gold. And while investors who would be buying those other metals are still clueless about what's happening. But imagine how much faster the price of gold is going to go up when the central bankers have to compete with private investors who are right now not even in the market, or when the Western central banks, because the U.S. hasn't bought any gold, right? They're not buying gold in the U.K. or Germany or France. It's the East that's buying the gold. It's the emerging markets. Look, Poland now has more gold than the United Kingdom, right? So what happens when the West wakes up to what the East is doing and realizes that they need more gold?
Why haven't we been buying gold? Why hasn't the West been buying gold?
They're not.
Yeah, but why haven't they? What's the rationale?
I don't know. I mean, the America doesn't want to buy gold because it wants people using the dollar. But look at all these sovereign wealth funds that are loading up, in Switzerland or Norway. They're loading up on tech stocks. They own MicroStrategy too. They should be buying gold mining stocks or physical gold. Eventually they're going to do that, but they haven't been doing it.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top-notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. Yeah, there does appear to be I don't want to say a capital rotation, but a lot of capital being dumped into U.S. stocks as a means of a safe haven trade. When you, for example, when you map out U.S. stocks versus the world stock index, U.S. stocks have outperformed the world in over a decade now.
How long? It's not even close. I mean,
yeah.
in dollar terms, the rest of the world has gone sideways.
Yeah.
While the U.S. has gone up. We've been the only game in town, but we're a gigantic bubble. And that thing is going to pop. You know, as we're talking, gold's about to go through 2,790. It's at a new record high as we're speaking.
Yep.
But to just, you know, look at what's going on, silver is still down on the day. It's having a pretty big down day. It's down about 55 cents, which is a decent move, you know, 1.6, 1.7%. And the gold stocks, look at the big gold stock indexes. GDX is down 1.5%. GDXJ is almost down 2%. 2% with gold up $15 at an all-time record high, just under 27.90, and people are selling gold stocks. I mean, I've never seen a bull market with less conviction. You know, you have irrational exuberance everywhere except gold mining stocks, where you have irrational pessimism. They're afraid. Every time gold goes up, they're afraid it's going to crash. There is no fear of missing out here.
Yeah,
right?
Talk about a wall of worry.
It's all fear of losing money. There's no greed anywhere in the gold mining sector.
Is there a difference that we could see in the precious metal space depending on who wins the election in a week from now?
I think Trump is most likely going to win. I've thought that even from before Biden's, had his debate. And when they brought out Harris and they tried to hype her up, I didn't think the public was going to buy what they were selling, that she was a flawed candidate. So he's probably going to win. And the market knows that, and price of gold keeps going up anyway. So, I don't think that a Trump win is going to cause gold to go down. I do think that if Trump wins, it may cause U.S. investors not to buy gold. Because most of the gold buyers are Republicans, and they really they stopped buying gold when Trump was elected the first time, because they believed that, hey, he's going to make America great again. He's going to do all this great stuff, so I don't have to worry and I don't have to buy gold. And of course, he didn't do anything that he promised. The budget deficits went up, the trade deficits went up. He didn't drain the swamp. The swamp just got deeper. We just continued, to pursue the reckless deficit spending that we had under Obama. And I see nothing that would change that other than a crisis. But Trump is not going to accelerate that crisis by doing the right thing. I think it's going to be more of the wrong thing. But there will be a lot of false optimism that Trump's going to actually do something constructive. Now, he may be less destructive than a Harris administration or whoever is going to end up pulling the strings behind the scenes, because I don't think she has a clue, what to do about anything. I think she's just going to do what people tell her to do. But the people that are telling her what to do are not going to be telling her the right thing to do. So I think gold goes up no matter what. But I think people will be more interested in buying gold if Kamala Harris wins. Certainly my clients at Schiff Gold will want to buy more gold because they'll be more worried with Kamala at the helm. But maybe gold would sell off if she won initially, if gold's been rising based on the idea that Trump is going to be more inflationary than Harris, which I think is a stretch. I mean, even if Trump increases the deficits with his tax cuts, she's going to increase the deficits by probably more with her spending increases. Although Trump's going to spend more too. He spent more the first time he was in office. He just spent less than what Hillary would have spent. And Harris is going to spend more than Trump. But either way, it's going to be financed with a deficit. I mean, I think the tariffs that Trump wants to impose, they'll raise some revenue, not from the Chinese, from Americans. The Americans pay the tariffs, not the Chinese. So that will provide some revenue. But of course, there's going to be income tax cuts and other tax cuts that'll offset that. So it could end up being a net loss of revenue for the government, not a net gain.
What do you think about his comment about doing away with the income tax in favor of tariffs? Going back to the point, going back to where we were in American history before the Federal Reserve in 1913.
Yeah, I'd love to do that, but we have to recognize the reality and the differences between 1912 America and 2024 America, because before 1913, the government was able to run predominantly on tariffs, or not predominantly. That was maybe about 40% of its revenue. But they most of their revenue was either tariffs or they taxed liquor, tobacco, fire, stuff like that. They ran on excise taxes, indirect taxes, which is what the Constitution envisioned would finance the government, in peacetime. It was only during wartime that they thought they might go to a direct tax. And that's why they made it very difficult for the government to levy a direct tax. But back then in 1913, the federal government spent less than 2% of our GDP. So when you have a tiny federal government that doesn't spend a lot of money, you can cover the spending with tariffs. And Donald Trump mentioned in his speech, the period of time between 1870 and 1890 as the glory days of the Gilded Age, and talked about how we ran on tariffs, and the government ran budget surpluses for 15 out of those 20 years. So out of the 2 decades, the government actually ran a surplus 3/4 of the time, with only indirect taxes. There was no income tax, either personal or corporate. There was no payroll tax, no Social Security, no Medicare, but the government was small. Today, the federal government, not even counting the states, just the federal government spends 24% of our GDP. So it's more than 12 times as big as it was before we had the income tax. And that's not a coincidence. The reason the government is so big is because we have an income tax. That's what enabled the government to get the revenue to grow. If they didn't have a direct line into our pockets, they never could have expanded the way they did. So it would be great to go back to the 1913 tax system, but that means we have to go back to the 1913 government. So we got to get rid of Social Security, Medicare, Obamacare, all the stuff that the government does now that it didn't do back then. But we had a better country before the government did all this stuff. We had a more prosperous country. Economic growth was more than twice as high before we had the income tax as it is now. And it was real economic growth that went from the bottom up. I mean, people were lifted out of poverty. People were coming to America, millions at a time. Immigrants were pouring into America because we were free and prosperous, because we didn't have a big government. We didn't have all this social welfare. People just came here and went to work. And, and everybody benefited from the freedom that we had when government was small. And now people are suffering from the freedoms we lost because government is big. And government got big with the income tax. So yes, and ironically, people don't know this, it was a trade-off. What the politicians at the time said to the people is, you're paying all these tariffs. Why don't we have an income tax on the rich so we can get Carnegie and Rockefeller and Vanderbilt? We can get those super rich guys to pay an income tax of like 1 or 2%. And they can afford it because they're super rich. Right, they're not paying their fair share. So let's put a little tax on the rich, and then we can get rid of the tariffs that are falling on the middle class and the poor. And that was the deal. And that's what they said. Yes, we need an income tax so we can get rid of tariffs, because everybody knew back then that the middle class paid the tariffs and the rich would pay the income taxes. And now what Trump is promising is to bring back the tariffs, but that actually goes on the middle class. But he's trying to pretend that the middle class isn't going to pay it, that China's not going to pay it. But, ironically, the initial tax rates that they bandied about, was 1-2%. I think the max was 6%. Like, that was the highest. And I think there was the initial income tax, they thought about putting a cap of 6%. And I think they said, well, no, they didn't want to put a cap that high because they thought people might actually get up there. They didn't even expect it to get that high. But it didn't take long before the income tax got to 80-90%. And, by 1942, when the Second World War started, we had the income tax for the withholding tax for the first time, and Americans were paying 30, 40, 50% tax. Middle-class Americans were paying income taxes at rates never imagined for the Carnegies and the Vanderbilts and the Rockefellers. So that's what happens. You make a deal with the devil, right, and you're going to get screwed. The voters were conned into allowing a tax that was only going to apply to the super rich and only very small rates, and then that very tax ended up applying to everybody at rates much, much higher. So you never want to give the government a club with the belief that they're going to use it only on the rich, because the minute they get that club, they're going to smash it right on you, right? And that's what they're trying to do now with a wealth tax or, unrealized gains. Oh, don't worry about it. It's only going to be for the rich. Yeah, that's the camel's nose under the tent. The minute they get power under the guise that they're going to use it against the rich, right, they end up using it against everybody.
Could they do an unrealized tax?
Well, I mean,
is it constitutional?
No.
Yeah.
But, there are a lot of things the government does that are unconstitutional. So, the question is, could they get away with it? They might. It depends on the judges. If the judges are honest and enforce the Constitution, they won't. But if they ignore the Constitution under the guise of interpreting it and just, allow it, there's a lot of unconstitutional laws on the books.
Yeah, I mean, going back to the income tax versus tariff discussion we're having there, I mean, the way I view it is that an income tax is inherently immoral because it's an involuntary tax on your labor, whereas tariffs, although they may be an invisible tax on the middle class, consumption is still voluntary. You can choose.
Yeah, it's much better to tax consumption from an economic perspective, from an individual liberty perspective. Look, when you pay an indirect tax, which is a sales tax, or a tariff or a value-added tax, I mean, it's very simple, right? I buy a product, the tax is included in there. I don't have to write a check to the government.
Right.
I don't have to hire a lawyer or an accountant. I don't have to keep books and records. I don't have to tell the government everything about me, right? I don't have to tell, all my doctors, all my charities, all my income, everything I spend, right? The U.S. government knows more about Americans than your typical, communist government would know about their citizens. We furnish the government with all sorts of personal information. There's no privacy at all. We give all that up. We have an entire industry, right? How much do we waste just complying with the income tax on accountants and lawyers and audits and all
it's an
this
entire
stuff.
complex.
So from a civil liberty perspective, it's much better not to have to do this, not to have to keep track of what you earned. Just buy stuff and the taxes are included. You don't have to do anything, right? So that's the simplest system. And it's also self-corrective as to abuse. That's why the founding fathers loved excise taxes, because if they make the tax too high, I'm just not going to buy the product that's subject to the tax, and you're going to collect nothing, right? So if the government makes an indirect tax too high, they don't get the revenue. But when they can tax you directly, if they can just say, we're going to tax you, we're going to take your money from you, you can't avoid that. They can have a just capitation. They say everybody has to pay. Everybody send us $1,000, right? Every man, woman, and child. You got to do it, right? It's direct, But even an income tax, you need income because you have to work, you have to eat, right? You got to, so they know you're going to have to work, and so they just tax you directly. And even as they jack up the tax, now obviously at some point there is some self-correction. If they made the income tax 100%, nobody would work, right? Because you get nothing. At 90%. Very few people would work. Most people would say, screw it. I'm not going to work for 10 cents on the dollar. I'm not working. Right. So they have to, there's a
point of diminishing returns.
Yeah. I mean, that's the Laffer curve, right? Where Laffer on his napkin, because they try to find the optimal point where the tax rate where people will keep working. So the government keeps collecting taxes, because as you increase the tax on income, you reduce the incentive to earn income. But at some lower level, the tax on income might actually encourage you to work because you need more money because the government is taking some of what you earn. But also, the main thing from an economic perspective, if you're going to get less of what you tax and more of what you subsidize, right? Whatever you tax, I love it. That's like an economic law. You don't want to tax people for working and being productive, because why would you want less productivity and less work? You would want more work. So it's better not to tax people on what they earn, but on what they spend, right? So don't tax them on what they put into the economic pot, tax them on what they take out. Now, a lot of people don't like that because they say, well, a millionaire or a rich guy who earns, let's say somebody earns $100 million a year, but only spends $10 million, on jets and yachts and vacations, whatever. And so 90 million, they don't spend. Now, hey, that's not fair, right? Because, you're only taxing 10% of his income, whereas a middle-class guy that earns 75,000 a year spends every penny, right? Well, the rich guy who's spending 10% of a huge number is paying a lot of taxes on that stuff. But the money that he doesn't spend, what's going on? Where is that money going? Is he taking that money and burying it in a hole in the ground? No, it's being invested in the economy. It's there as capital that's being loaned out or invested to entrepreneurs so that we can have capital investment and grow businesses and create jobs. When you're earning money and not spending it, you're a benefactor to society, right? So it's the playboy that is squandering money, right? Yeah, tax that guy, right? If somebody is spending all their money on wine and women and whatever, sure, tax all that stuff. But somebody like a Warren Buffett, who is very frugal with his money, has all this money, but he lives in a modest home, he drives a modest car. Well, why would you want to tax that guy when all he's doing is using his wealth to grow the economy and benefit everybody, right? It's not the consumption that drives the economic cart. It's the production, and you get production when you have savings and you have investment. And so you don't want to tax people for saving and investing their money. Just tax them when they spend it. Because again, all the money eventually is going to get spent by somebody. If it's not the guy that earned it, well, his heirs will get around to spending it. And so tax people when they spend their money. The only problem with the transition, if we go from an income tax to a consumption tax, we've already taxed the hell out of people when they earn the money. And now we're going to tax them when they spend the same money that we already taxed them to earn. So
yeah, there is that period. Yeah, there is that period where it's going to have to self-correct a bit. When you're going to have to meet the two dots where you've overtaxed on the income side, so they don't have any money to spend. But now you're going to tax them when they spend. So yeah, good point.
You're going to get them coming and going. I mean, they already do that in a way with the estate tax. They tax you. You pay taxes on the money all your life, and then what's left over, you die, and they take half of that again.
Yeah. Is America still the best place to make money is America still the best place for economic liberty, for entrepreneurs, for high net worth individuals, or are there better places out there in your opinion?
Well, it's definitely not the best place. Certainly to get started, younger people getting started. There are other countries where it's better, where you have fewer rules and regulations, places like Singapore and Switzerland and Dubai. And, and there are a lot of other places too that it's easier because you have fewer regulations, you have fewer government interference in the economy, and you have low to no income tax. So at one time, America was the best place to start a business. It's not anymore. It's not the worst place, right? I mean, there's still a lot going on here, but it could be a lot better than it is. But the problem is that, we're going to have this crisis that's coming that's going to make it even worse because overall the country, we just, I mentioned on my own podcast yesterday, but we came out with our merchandise trade deficit, almost $109 billion in the month of October. It was the worst trade deficit we've ever had, with the exception of 1 month, which was the month that we opened the economy after COVID. And we had months and months of pent-up imports that had been piling up on the docks because there was nobody there because they were all at home under quarantine. We finally opened up the ports and all this backlog shipped in. And so that was the only month that was a bigger trade deficit than the month we just reported. And so that is a huge problem that, our economy is so screwed up that we cannot produce the things that we consume. And we are more reliant than ever on the productivity of the rest of the world because they have the factories that we don't. And the only reason that they're willing to sell us what they produce is because we've got the reserve currency for now. But once the world abandons the dollar, then we have no ability to import those goods.
When do we get to that point, though? We do have a debt to GDP ratio of 110, 120%, but theoretically, that ratio can go up to infinity insofar as there's someone to buy the debt, right? So when do countries stop buying our debt?
Well, I mean, there's not going to be enough people, but also our debt to GDP is very misleading because our GDP is so much, personal spending, 70% or so. I mean, if you look at the wealth generating part of our GDP, the manufacturing, mining, the productive part, I mean, the debt is enormous relative to any other country in the world. And so our GDP can implode very quickly, and the debt doesn't, right? The debt stays the same. And so, and the way our GDP would implode is the dollar goes down and interest rates go up and people can't afford to spend anymore. So the spending stops and so the economy implodes, but the debt's still there. And so then our debt to GDP goes way up.
Right. Well, hey, I think we've covered a whole host of things here, Peter. Anything else you want to talk about that we didn't get a chance to before we wrap up?
No, I think if people want to hear more of my thoughts, they should start listening to my own podcast. I'm doing another one on Friday after we get the jobs report. We got a GDP number today, but I like to comment on the numbers that are coming out. We lost another 19,000 manufacturing jobs, part of our ADP numbers. I mean, people don't talk about what's going on with this manufacturing depression that we're in. That's part of the reason that our trade deficits are so high, because we're not making this stuff here. We got to import what's made someplace else. So tune into my podcast, The Peter Schiff Show, schiffradio.com. You can listen on my YouTube channel. Start following me on social media. I'm constantly posting on X. I've got over 1 million followers there now, so I've got a reason to be posting because I know people are paying attention. But you can follow me on YouTube and Facebook, Instagram, TikTok. I mean, I'm pretty much on all the social media platforms. I've got a new newsletter now that we're putting out, maybe 3 a week. You can sign up for it at shiftsovereign.com, absolutely free. We'll email it to you as they're written. Very informative newsletter. We do have a premium service that you can check out, once you start reading the free letter. If you want to get more, more in depth, you could do that as well. And again, I'm always looking for new clients to work with at Europe Pacific Asset Management. We manage 5 mutual funds that you can buy anywhere. We have separately managed accounts where you can work directly with us, and we'll manage your portfolio at Europe Pacific Asset Management. You can see the URL above my shoulder. There's a phone number there too you can call. And if you want to get some gold, and particularly silver, before it really starts to move, you can contact my guys over at Schiff Gold and buy some physical gold and silver.
Excellent. Well, we'll have all those linked down below, Peter. Thank you so much for coming on. And thank you guys for making it to the end of this video. If you got value out of this video and this channel, remember to give us a like and subscribe to the channel if you haven't already. And also check out our Substack, capitalcosm.substack.com. We have a link to that down below in the description as well. So with all that said, you guys, thank you so much for watching, and I'll catch you in the next episode. Bye.
Take care.